Good morning, good afternoon, good evening, and welcome to Martyn Lucas Investor. We're now talking Grab, ticker symbol GRAB. Grab Holdings. We're going to do a full analysis. It's 72 hours of back-to-back videos. Yep. Next few days, I'm doing nothing but this, back-to-back, your reviews, your requests. If you are watching me live right now, which you can be watching me live right now, as I make these, if you do a super chat, a minimum of $5, I will add that to the list and I will make your very own live Q&A or live video on whatever it is you wish me to cover. $5 minimum, and you have to be a member if you do that. I'll also read it out on the screen as confirmation so you know I've seen it. So without further ado, we've got Grab. Now you'll see below me on the big screen just here, the Honest Company. That comes up, a full analysis. You just asked for that with a super chat. And that's coming up next. Whichever super chats are the highest, they will rank first, and they will get done next. The current top super chat is $10, and that's why Honest is next. So you can have your very own, whatever it might be. Please don't super chat for anything to do with crypto other than XRP and Bitcoin. That is Sensei's bag, and I don't focus on that. So don't ask me to do a review on Binky Bonk. It's just not for me. Even if you give me $1 million, I will say no. All right, so please just don't do that. All right, please do tap the like button if you are tuning in live. Let me know you are here in the chat. Lovely to have you with me. And click subscribe and ring the bell. This is Grab Holdings. So what's going on with this one? What's it all about? Let's get straight into it. And you've already got pinned to the next event will be Honest Company. What's that all about? That comes up in a minute. Well, let me start by showing you what what Grab is. From essential services to earning opportunities, we're an all-in-one platform. I get a bit overwhelmed when we get an all-in-one platform. It can be too many things, in my opinion, but that's just my experience. This is their website. And they do lots of different things. We're going to cover it in more detail, but I just wanted to start off by showing you the website so you could get a feel for it. As you can see, a very, very basic, very much in the sort of 80s website here, very low tech. And that's important because it presents the company in a certain light. So just worth knowing that. Anyway. Let me go to our analysis for you. Now, I'm going to be using software that I've paid to use, so pro software, and my members can get a free trials and discounts for all of this. There's my alpha spread and my seeking alpha in the chat. If you want that, it's also below the videos as well. You can get full analysis yourself, and you can get free trials and discounts. So you might as well go and try that. If you want to follow me on Instagram and X, the links are below, also in the chat. If you want to become a member as well, and you want me to make a live stream for you, there is the link to become a member as well. Right, let's start by introducing you to what exactly this business is. What is Grab? Well, Grab is was founded in 2012 and Southeast Asia's economic super app, headquartered in Singapore. It provides a wide range of services through its platform, including mobility, deliveries, digital finance services, and enterprise offerings. Grab operates in 8 countries: Cambodia, Indonesia, Malaysia, Myanmar, the Philippines, Singapore, Thailand, and Vietnam, positioning itself as a crucial player in the region's tech ecosystem. The company connects driver and merchants partners with consumers for services like ride-hailing, food and grocery deliveries, digital payments, financial services. Grab's offerings are tailored to local markets, providing solutions such as GrabCar, GrabFood, GrabPay, and digital banking through GXS Bank in Singapore and GX Bank in Malaysia. With an extensive network of over 6 million driver partners and merchant partners, Grab aims to drive economic empowerment in Southeast Asia. The company has a strong brand associated with quality and reliability, maintaining leadership in online food delivery and ride-hailing by GMV in the region. Grab is committed to sustainable growth, focusing on technology and infrastructure investments to enhance such experiences as operational efficiency. Let me show you the long-term chart of this company. Now you can see IPO back here in this was 2020. It popped. All stocks were popping on IPOs back then, not so much in favor. As you can see, it's very much a trading stock. Fell away, collapsed basically, and it's just verging on a penny stock at the moment. But if you look at it over the year to date, you can see that this is a trading stock, not something perhaps you might want to own, more to do with a trading position. And talking about trading positions, let me go down and show you the average volume, 29 million today. The average volume today's the volume today is 27 million. So we're just slightly below average today at the making of this video. 20 billion is the market cap. There's no dividend with this, and negative PE. Now, someone asked me the other day about negative PE ratio. It's the price to earnings. If something is negative, it doesn't necessarily mean it's cheap. Of course, it just means it doesn't make any money. If we scroll down here, and we see this down here, we will see the company isn't making any money. That's why it's a negative number. I like to buy businesses that actually make money. Now, this company has been around for a while. Let's have a look back to its date up the top here. It was founded in 2012, and it's still not making any money. So straight away, I only buy businesses that make me money. All right, I don't gamble. It's why I've done 20 trades, 20 wins. As you can see, this company isn't making money, so its price to earnings is negative. So it sounds cheap, you know, rather than paying 20 times earnings or 50 times earnings, or in case of Palantir, 600 times earnings. But at the end of the day, I mean, that's a bit crazy. But at the end of the day, I buy businesses that make money. This doesn't make any money right now. You are speculating because it doesn't make money right now. As we can see, the fair value is $5, but we'll come on to our intrinsic value later on in this event. But if we go down to this position here, this shows you hedge funders are buying the stock, but they're also trimming as well. They're buying more than they're selling, but they are trading this stock rather than just holding it. Insiders have been selling, however. Now, straight away, when you see insiders selling a stock, there's nothing to encourage you to buy it, is it? If they're selling it, why would I want to buy it? So straight away, it's not looking good. This business has been around for a while. It's a trading stock. It's not making any money. It's very, it's all over the place with what it does, and it's insiders are selling it. So should we be buying it? Well, let's have a look at some analysis, shall we? And let's see what we think. Please tap the like button and consider subscribing to this live stream. We're doing 72 hours of back-to-back live streams to answer all your questions. All right. From Quant, now Quant is very important. Quant is saying and suggesting a strong buy right now. However, Quant, you got to remember, and Quant outperforms the S&P, so there could be something here. The reason why I say Quant outperforms the S&P, because on its record, it's AI software with Seeking Alpha. I've just given you the link, by the way, if you want to get this software. All look below afterwards, but it's outperformed the S&P in its performance, and they're saying a strong buy. All right. Anyway, let's scroll down and look at this. Competitors and unique value. This is important. Grab Holdings Limited faces competition from several key players in the Southeast Asian market. Uber, Gojek, and Sea Limited. Grab's unique value proposition lies in its super app ecosystem, which integrates various high-frequency services such as mobility, deliveries, and digital financial services on a single platform. So it does have a unique proprietary attribute to it. The integration allows for cross-selling and provides consumers with a seamless experience, enhancing loyalty and engagement. So what their selling point is here is they do everything. They're kind of jack of all trades. One app for everything. I've got to be honest, I'm not a favor of a business like that. Imagine, I know you think of Apple, for example. Apple has finance. Apple sells equipment. It sells, services, but it doesn't deliver burgers, and it doesn't organize road pickups. It's essentially all around the services supporting and working alongside their iPhones and their computers, right? Essentially, you know what you're getting. This does kind of everything. So that's its unique value, if you like, worth talking about. Now, if we look at our performance of this stock, now this is important to show you this, right? The valuation is C minus. Obviously, it doesn't make any money. D is the worst. It's a C minus, so it's virtually D. Growth A plus. It's had massive growth. Profitability A. Well, I would argue that it's not making any money at the moment. So I'm not. I mean, it's grown a lot, but it's still not making money. It's making money, but it's not overall profitable. Now, this is important, right? If you spend 10 and you bring in 10, you've got revenue, you've got income, but you haven't made any profit until you make 11, right? So we're going to cover more on the balance sheet in a minute, but the profitability is A. I would debate that. Momentum is A. Revisions is A. The company is growing. No question about that. Valuation. Well, let's talk about that. Grab presents a challenging valuation landscape. Its prices to sales ratio of 7.06 is significantly above the sector median of 1.58, indicating a very expensive stock. Now, even though it was negative in the PE, it's expensive because it doesn't make any money. Does that make sense? Very important to understand that. People often go, it's minus, so it must be a good deal or whatever. The price to earnings ratio is not there. It's expensive. However, the price to book ratio, 2.93, is slightly below the sector median of 3.2, suggesting more areas of relative affordability. So certain parts of the business are more affordable than others. The growth. Grab demonstrates outstanding growth metrics with operating cash flow of 551% and revenue growth year on year of 22%, both significantly outpacing the sector's average of 5% and 4% respectively. This showcases Grab's successful expansion and robust financial performance. So it's growing, pre-revenue, but it's growing. Profitability. Grab showcases strong profitability with a levered free cash flow margin of 43%, significantly higher than the sector median of 7%. So it's borrowing money to make money. It's not completely profitable, right, at this stage. The gross profit margin stands at 42%. Surpassing the sector median of 32%. We'll talk about its margin there in a moment. Its margin is regarded like a moat. If you think of a castle, and your margin is how much profit you've got from your competition. So the more margin you've got, if you're a business and you've got 90% margins, you've got massive amounts of profit, then you've got room to crush the competition because you can always compete because your margins are that high. So that's quite good. Momentum. Grab stock momentum is exceptional with a 1-year price performance of 39%, far exceeding the sector median of 6%. This indicates strong investor confidence and a bullish sentiment towards the company's prospects. Revisions. Recent earnings revisions are promising, with a 14 upward EPS revision and 21 upward revision revenue in the past 3 months, compared to only 1 downward revision in each category. So the company is growing. Positive areas by analysis. I'm not going to show you analysis opinions because people are paid to say these things, and I don't regard them as accurate if people are just simply paid to say stuff. I don't like it. This is some latest news. This was out just a few days ago. Grab Holdings gains on go-to deal talks HSBC upgrade. So they've recently had an upgrade. Grab Holdings jumped 9%. This was just a few days ago in pre-market trading after the report that it's considering a takeover of rival Go2 Group at a valuation of more than $7 billion. The ride-sharing provider also upgraded to buy at HSBC. Under a potential deal being discussed, Grab may offer an all-stock valuing Indonesia's Go2 at more than 100 rupiah each, according to a Bloomberg report on Tuesday, which cited people familiar with the matter to bid the bid would represent a 20% meat premium to GoTo's current price. I thought it was worth sharing with you that piece of information there, all right? Now, what we're going to do now, we're going to look at the balance sheet so you can understand the actual business itself, what it actually has, what it doesn't have, and visually show you its positions, all right? Okay, so let me bring this up on the screen. Now, this is why I say it's expensive. Its intrinsic value is overvalued by 43%. Let me share with you what I mean. This is why I was saying the stock is expensive. And I've just realized I need to change the resolution of this. So that's exactly what I'm going to do right now. Let's fit that into there. Okay, that's better. That's how I want it to be. So if we look here, this is the intrinsic valuation, 43% overvalued. Now, it is a growth stock. It's been around for a while, but I'd like it to be making more money than it is, but never mind. It's overvalued by 43%. For what it earns, amount of money it earns you, it's too expensive. The intrinsic valuation is too expensive. We value this stock at $2.74, and you're paying currently $5.07. So it's expensive. We talked about that earlier, all right? If you've just tuned in, please consider subscribing to my channel and tap the like button. That would be absolutely awesome. We're making this during a live show, and I'm adding your analysis, your reviews to all of the events today. You can get whatever it is today made for you live by being a member of our channel. Here is the membership link, doing a minimum $5 super chat. If you're the higher you bid, the higher in priority and in the list this goes, and I will get your analysis done or questions answered in your own live video. If we scroll down, we can look at the financials. Now, you can see that this company is growing. We talked about it earlier on in the video. It is growing, but up 4%, rising steadily, but no real S-curve here to support the high valuation though, right? Operating income up 32%. Things are definitely improving for this business. Net income is up 55%. 55%, but you can see still losing money. Hopefully now we're about to start making some money going forward. Free cash flow, 3%, up 3%. Operating cash flow, up 3%. EPS, up 60%. Things starting to improve for the valuation of this stock. No question about it. So things are getting better. All right? Okay. If we scroll down here and show you the assets, what the company owns, gives you a balance sheet. 9.2 billion in assets, 5.7, which is a very high ratio for their cash. 61% cash. They've got loads of cash. But I'm not really a favor of a business just holding cash. I like it to own assets and products and services that make money, not just holding cash. But it does have a pile of cash. So I bet you the balance sheet looks pretty good. We'll come on to that in a minute. Liabilities and the profitability and solvency score, that's what I mean. 2.8 billion in liabilities. Long-term debt, hardly any. 228 million, no short term. So it's got a bit of debt, but nothing to worry about. If we look at the long-term debt there, it's 8%. So this is a business you can buy and not worry about it going bankrupt in the short to medium term. No question about that. It's got plenty of cash, liquidity. It's not going bust and all the rest of it. Now, gross margin, we talked about the margins earlier, 41%, which is very, very good for the sector. And it's moving up, actually. It was negative. It's moving up. Operating margin. This is what's important. This is negative. So its gross margins start out okay. You go, okay, it's got good margins. But after expenses and profits and blah, 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 it's actually losing money. And people focus on that. And they should be looking at that. The net margin. This is what it ends up with. Negative. It's improving, though. This has got potential. FCF margin. 17.9%. Now, if you want to know what these terms mean, you can hover over my software and you can get all of this information explained to you. So in the chat, I've given you my alpha spread. This is alpha spread. All my members get a free version of this. All members get a discount as well. So it's worth becoming a member just for this. In fact, it pays for itself just to be a member for the discounts you get on this. I know the CEO and you get the best deals. No one gets a better deal than me. Otherwise, I don't do business with anybody. All right, that's just the way it is. ROCE, negative. ROIC, negative. So you can see all of this is negative at the moment. All right, it's not making any money. Profitability, 42. So it makes money, but not net profit. All right, 42%. It's better. It was red. You can see it's starting to turn green. It's sort of a ambery type green right now. It's not there yet though. Getting there. Now, solvency score, 53%. Still yellowy. It's not bright red. It's not green. It's not going to go bust. You can invest in this going, okay, it's got cash. It's got assets. It's not going to go bust anytime soon, which is absolutely the case. All right. Very, very good. What about the downside to this? Well, lowest forecast is pretty flat. No one thinks it's the worst case scenario. There's no real downside here. The upside on average is 17%, outperform the S&P. So that's really good. And if things go well, if interest rates came down, which of course they're not at the moment, they're going to stay up higher for longer, 73%. So average 17%, you can outperform the S&P. Not too bad. No dividends, of course. Nothing going on. Not a great deal of news around this. Last news was from CNBC 2 months ago. No one's really talking about this stock very much. It's not really getting much attention. It will after today because we rank number one for most of the stocks that we cover, and I wouldn't be surprised if this stock gets a lot of attention on today's analysis. So, what do we think of this? Is it worth a buy? Well, it's growing, but it's not making any money. Not profit. I mean, not net profit. It makes money, but after expenses and so on and so forth, it doesn't make any money. For me as an investor right now, people are buying the future price. It's a bit expensive, but it's not as bad as others in its sector. So not too bad. Grab has potential. So I would say it's one to keep your eye on. I'm not going to say, yes, rush out and buy it. I wouldn't give financial advice like that anyway, but it certainly has potential. If I show you the metrics, this is using our Seeking Alpha. I'll give you that now in the chat. It's also below as well. Free trials, discounts, so on and so forth. Go and check it out. Everyone is saying it's a strong, well, Quant is saying strong buy, Wall Street's saying a buy, Seeking Alpha analysts don't care what they say, they get paid to say stuff, not really that bothered. But at the end of the day, people are liking the future of this. Valuation is expensive, but not as bad as it could be. But this company is growing at the moment. It's just a little bit expensive. We talked about this stock a few months ago when it was much better value. It's got a little bit ahead of itself. Valuation is a little bit out. Other than that, everything else looks pretty good. You can probably buy this and make some money. It's a trading stock right now. So there you go. I hope that was of some help to you. This was our latest request. You asked me to cover this stock, and there it is. So what we got coming up next? Well, very, very shortly, I've got my next event for you, and I'm reviewing Honest Analysis. Yes, the Honest Company. What's that all about? Well, it's definitely honest. So tune in for that review in a short while. The time is pinned to the chat. So what I'm going to do is give you the event right now. I think it's already pinned, but I'm going to give it to you. Those watching live now will be able to see this. Here is the next event. I'll put it 3 times so it pops up. It's also pinned to the top. That's my next event. If you are watching this and you are a member and you do a super chat, minimum $5, I will do your analysis for you or answer a question. We've got a lot of stocks coming up today, including we have Robinhood earnings after hours tonight live. We also have dividend exposure to scams, people overbuying dividend stocks that promise you huge yields and returns and dividend payouts. All nonsense. I will do that coming up shortly. So that's it from me. That the link is in the chat. I'm just going to make sure, yes, it is. It automatically takes you to review. Hopefully see you there on the next one. And there it is. I hope you're enjoying these live streams. The times are on the channel so you can see when it was made, when the stock relates to the time, so it all makes sense as well. All right, hopefully you all tap the like button and considered subscribing to the channel. So links are all above my head and down below in the description, also pinned to the comments. Alpha Spread, Seeking Alpha, all the data. Over here, I shall put the Grab playlist, so you can go and check out everything I've ever said in the Grab playlist. And down here, I shall put the next event. The next event will be Honest Company, and you can tune in for that one. So there you go. Thank you ever so much indeed. I hope you're enjoying this. I'll see you on the next one, and we're talking Honest. What comes next? After Honest, that is entirely up to you. Until next time, as always, take care of yourselves and each other.